Hello everyone, and welcome to today's webinar on 9 things that you should know about the business credit reporting agencies. Today what we're going to do is we're actually going to dive in and we're going to talk a little bit about the business credit reporting agencies. We're actually going to talk a lot about it. We're going to talk about from the inception, the history of the bureaus. We're going to talk about from the very beginning to where they are now. And along the way, you're going to learn a lot of really cool things that most people don't know about their credit reporting agencies that you really should know. Actually, I'd like to think that you're going to probably learn well more than the 9, but I'm going to highlight at least 9 along the way. And again, I think there's a lot of good information you're going to be able to get out of today. Let's talk a little bit about the business credit reporting agencies, who they are, their histories, and again, many things, including 9 things that you really are going to want to know. Okay, so there are 3 major companies that collect business information and publish it. These are Dun Bradstreet, Experian, and Equifax. Okay, D&B is by far the largest, but the other 2 are catching up pretty quickly. So you can see right away, TransUnion's really not a big player in the business world. Okay, this is it. Dun Bradstreet, Equifax, and Experian are by far the 3 biggest players in the business credit space. Now, there are a few other businesses that are doing a few other credit reporting companies other than Experian, D&B that you might hear of, like LexisNexis. Okay, but they're not big players, and a business owner won't need to worry about them much. Some of these include PayNet, FDI Insight, Business Credit USA, and Client Checker. And again, I was actually just looking at this topic today, thinking that in a couple weeks I might do a webinar on this topic, on the credit reporting agencies that people don't know about. But again, there's several of these. A lot of these you might hear of, including LexisNexis, that are in play, but it's Experian, D&B, and Equifax that are really the major players. Which brings us to number 9. Who uses which bureau? Well, D&B is really the most common, and it's used by most vendors to extend lines of credit. Okay, so most vendors that give credit lines or lines of credit or even credit cards are using D&B. Now, a lot of this fits in with the retail stores, your Staples, your Home Depot, your Lowe's. Those type of places also commonly use D&B, while landlords tend to approve office leases as well based on D&B. Now, Experian is commonly used by many credit repair or credit card companies and non-traditional bank lenders. Okay, so those are some of the different players. If you're getting into Visa, MasterCard, a lot of the credit cards associated with business credit building, it's more to do with Experian, while D&B has to do with a lot more of the vendor accounts, but has to do a lot more with trade credit. Now, business credit, Equifax is I didn't mention because they're not commonly used. They're actually called, their scores, the Small Business Financial Exchange is what they're called in the business world. And it's most important for cash lenders, such as banks. So banks do use Equifax, but a lot of your common players, especially in business credit, commonly don't. So to concentrate on just one of these, though, and not the others, is going to have lopsided credibility, meaning there are some that will pull like Experian and D&B. So a business really needs to build business credit with all 3 of the business credit reporting agencies to achieve genuine credibility. Hey, just so you know that, if you're helping your clients in the building of business credit, even though you're going to learn here today, Equifax is not really used. I mean, they are very rarely really looked at in the business world. But even then, somebody wouldn't want to ignore Equifax. Along the way, even though you're going to learn they're not as big of a player, it's still important that a client comes in and that builds business credit with all 3 so they don't have a lopsided credit profile. Now, Dun Bradstreet is by far the biggest and major business credit reporting agency. Okay, they're commonly known as D&B. You'll hear this all the time. You'll hear it referred to as a PAYDEX score, D&B. This is Dun Bradstreet, and this agency provides information on businesses and corporations for use in credit decisions. D&B is a publicly traded company. Okay, so they are on the actual New York Stock Exchange, and they're actually housed in Short Hills, New Jersey, is where D&B is actually out of. There was a lot of talk last year about them selling themselves that you probably heard, which they ultimately took back. But D&B is here in the United States. They are actually out of New Jersey and trade on the New York Stock Exchange. And they currently hold by far the largest supply worldwide of business information. and you're going to learn in a little bit, the next person closest to them. But they have 200 million business records on file with D&B. And in 2012, they reported that about 129 million of those records referred to active companies that were available for risk, supply, sales, and marketing decisions, while another 76 million were inactive companies. So they're once around, they're inactive files now with D&B, but it still provides historical information for file matching and data cleansing. Okay, so which brings us to a number 11, number 8. How big is D&B compared to the other reporting agencies? Well, D&B has over 10 times the amount of records for businesses as the next closest company. Okay, so that's actually really something that's very, very important. They are by far the biggest, 10 times more records than the next closest company they have. So if you want to know who the major player is, and it's kind of funny if you think about it, D&B is not even a player at all in the consumer world, but in the business space, they own this space. They own it. I mean, they are the dominating factor with 10 times more records than the next closest, which is Experian. Okay, so that being said, it brings us to more on Dun Bradstreet. D&B has a massive presence worldwide, and that's one of the things that's interesting here. When you're talking about the business credit reporting agencies, you're going to see a lot of numbers here and statistics that are interesting, at least to me, because it's their presence in other countries, which they have massive, massive presence in other countries. Okay, so over 2 million records they had on file in 2012 that reported 54 were from Europe, while only 33 were from actually North America. Another 12 million were from Latin America, while 27 million records were from the Asia Pacific. The lowest volume of records on file with D&B was in Africa, which has only about 1.1 million on file, in the Middle East, which is just about over 1 million records on file. This is interesting. And what else is interesting is to watch this development, because I watch a lot with Google Alerts with what the bureaus are doing with Experian, with Equifax, with D&B, pressing more and more into these other countries. And it's very interesting to watch where they already have a heavy presence and where they're now really trying to push into that they don't have a big presence now. So D&B roots track all the way back to 1841 with the formation of the Mercantile Agency in New York. And in 1933, the Mercantile Agency joined with R.G. Dun & Company and became known as actually Dun Bradstreet. Okay, in 1962, D&B created the DUNS number, which is currently the preferred method worldwide for identifying a business. Now, D&B offers many products and services to customers and businesses, and some of those you're probably familiar with. Business information report, which is kind of their business credit report, a comprehensive report in the D&BI platform. That's basically their credit monitoring. Okay, this is D&B's credit monitoring, but on top of selling data, credit monitoring, there's a lot of other services that they also provide. And those services provide current and historical business information, primarily used by lenders and financial institutions to assist in making actual credit decisions. As we all know, that's where D&B is most commonly used, right? Is they're used by lenders and financial institutions who are actually making the credit decisions. Now, D&B also offers sales and marketing products such as the DUNS Market Identifier Database, Optimizer, the D&B Professional Contacts, all of which provide sales and marketing professionals with business data for both prospecting and CRM. We forget about this, right? We think about the business credit reporting agencies, but you don't really think about using their data for marketing. But it's brilliant to use for marketing because they're in the information business. That's the business that they're actually in. They're in the information business, and because they're in the information business, they're an excellent resource to actually get the data from. So you can go to D&B's website and actually get in on some of these products. And again, they have some really, really good products to be able to actually buy and capture information. The DUNS number is a 9-digit number issued by D&B and assigned to each business location in their database. Each business location that has a unique, separate, and distinct operation for that purpose. Basically, D&B really assigns records based on address. That's ultimately what they're saying there. So for every business in their purpose that they think is a separate address, a separate unit, they'll actually give that DUNS number to. Every business must first have a DUNS number before the Dun Bradstreet will assign a Paydex score. So when you're talking about building a business credit score with D&B, the DUNS number is the first step, which brings us to the next point, the importance of the DUNS number. Okay, the DUNS number is the preferred method worldwide of identifying businesses. So unlike the National Employment Identification Number, the EIN, a DUNS number may be issued to any business worldwide. Okay, we're all familiar with an EIN. It's the IRS's way of knowing who we are as a company. Okay, but worldwide, they use a DUNS number for that purpose. As a matter of fact, it's used by places like the U.S. and Australian government, European Commission, even the United Nations. Over 50 global industry and trade associations recognize the actual DUNS number. Now, Dun & Bradstreet has a DUNS right quality process, which provides the quality business information that's the foundation of their global risk solutions. So this is what they call their proprietary technology, a DUNS right quality process. Okay, and with that process, it was created on the basis of 4 fundamental questions. Is the data accurate? Is the data complete, timely, and globally consistent? So again, just kind of interesting to know how they value data, what it's based on. As a matter of fact, you're going to learn here in a minute where the Fair Credit Reporting Act was actually created because some of the other credit reporting agencies didn't value the accuracy of the data and the completeness of the actual data. But this is actually where they kind of pride themselves on the quality of their data. So to answer the question, Dun & Bradstreet runs that data through a process called DUNS right, in which the data is collected, aggregated, edited, and verified via thousands of sources. Okay, then their ability to turn this massive data into high-quality business information, of course, is one of the factors that sets them apart from any other competitor. Most people can't deal with that much data, 200 million records. And it's their ability to not only gauge this risk, to look at these things, to answer the questions about the quality and consistency and timeliness of their data, but to do it with a massive volume of data that they do. So first what they do is they collect the data. Okay, then the data is integrated into their database through their own patented entity matching system. Okay, then by applying the DUNS number and using the corporate linkage, they enable customers to view their total risk or opportunity across related businesses. Okay, D&B then uses predictive indicators to rate businesses' past performance and to assess future risk. Okay, this is how, the credit scoring basically is taking place here. And this is where they're coming in, they're getting the data, they're aggregating the data, they're integrating it, then they're basically coming in and assigning the risk to the actual data. Okay, so another thing that's very interesting, that's one of the points we're going to bring out, is how Experian really gets started. So we're going to actually move right on from D&B here to the second biggest player in the business credit world, which especially those of you on here that are involved in credit repair are obviously very familiar with, which is Experian. But what a lot of people don't know is how Experian actually got started. Well, Experian was formerly a division of TRW, which was an automotive electronics giant. And TRW was actually originally founded back in 1901 as the Cleveland Cap Screw Company. They started producing screws and bolts and grew to produce many parts of the aviation and automotive industry. Now, in the early 60s, TRW started a Consumer Credit Information Bureau, collecting and selling consumer data, and eventually became known as TRW Information Services. And then that company continued compiling data and were the first to start offering consumer direct credit reporting access back in 1986, which brings us to another point that's very, very interesting, how Experian originally got into trouble. So in 1991, rampant problems started appearing with TRW reported credit data. Thousands of people in a town in Vermont had tax liens inaccurately reported against them. Similar cases started appearing in the entire Northeast, forcing the deletion of countless tax liens across the states of Vermont, Rhode Island, New Hampshire, and Maine. It's pretty interesting. They were mismatching data. So what they were doing was all these people in this town, all these people started having tax liens appear on their credit report which weren't valid tax liens. So very interesting if you actually look back at these cases, and it resulted in them, losing a lot of money and having to rampantly delete all of these different accounts, or these actual accounts that appeared on these people's records. So dozens of lawsuits were filed against TRW claiming sloppy procedures to create the credit files, lack of response to consumer complaints, and all cases, of course, were settled out of court for very large sums of money. And then TRW then created a database known as the Constitute Relations Information System, or the CRIS, and that system's sole purpose was to gather the personal data, this is funny, on the 8,000 politicians who held opinions on TRW. So this is how an information collecting agency gets back, right? What they did was they got in trouble. Okay, so now because they got in trouble and they were under the watchful eye of the government, what they started doing was they created a whole database and just started collecting data and information on the politicians who basically held opinions on the matter against them. Okay, so in 1996, TRW was purchased from Bain Capital and the Tohamas Lee Partners for over $1 billion by a private label group. And then it was then combined with CCN, the largest credit reporting company in the United Kingdom, and then Gus retained the Experian name for their combined credit services subsidiary. Now, in 2004, Experian continued its growth. They purchased Cheetah Mail. I see a lot about that now in my Google alerts. I mean, that is up all the time. A business founded in 1998 offering email marketing services. In 1998, Experian also acquired Chaos, a supplier of contact data management and identifier verification solutions. And as a result of their growth, Experian became the first company ever to win the UK Business of the Year award twice, back in 2003 and 2005. Okay, so Experian continued to grow in 2005 with its purchase of PriceGrabber for $485 million. Guys, I'm going through all this because I think it's interesting. I just think it's interesting to see how these bureaus are branching out, you know, into these other areas. You can see that they're picking up all these different companies and the services that these companies provide. And as you see the bureaus continue to grow, it really gives you insight into their thinking, into their overall scheme of where they're thinking their industries are going to be taken into the decades to come. So in 2005, Experian also acquired Footfall, an information provider for the real estate and retail property industries. Experian also spent $330 million on acquiring LowerMyBills.com, which most people are familiar with. In 2006, Experian made a big move and announced the purchase of a Northern Credit Bureaus located in Quebec, Canada. Okay, so here they're making big plays to take over more of that Canadian industry. That same year, Experian demerged from their British company Gus and was independently listed on the London Stock Exchange, right? Pretty interesting. So a lot of people on this probably didn't know that Experian's not really in the United States, that they're trading on the London Stock Exchange, but they are. In 2005, Experian's continued aggressively growing. 2007, they actually purchased a large stake in Serasa, a leading credit bureau in Brazil. Brazil's a big play. A lot of them are making big moves in Brazil, which is now the largest credit bureau in the world. And Experian continued to purchase software companies that year, including Email Solutions, Hitwise, and Talion. In 2010, Experian became the first CICRA licensed credit bureau to go live in India, where it continues to supply reports to the Reserve Bank. And currently, Experian continues to grow at a pretty quick pace. In 2011, they actually acquired Computech, a credit services provider in Colombia also. And they also purchased Medical Present Value and a few other companies, expanding their data and marketing research. So their marketing reach. So you can really see they're making big plays in email space and marketing space and information space, and definitely making big plays buying other bureaus in other countries. You know, a lot of people forget that that's how the credit reporting agencies really started. You know, it used to be back in the day that there was tons of credit reporting agencies. Each state had a lot of them. And then as these big ones started to form, especially in the consumer world, then they came up and just started buying masses of these little bureaus until basically they were all gone. So you're starting to see that same pattern now, you know, actually continue into these other countries. So Experian's also become the second largest reporting agency in the business credit world. So interesting to know that they are second. They provide records for about 27 million businesses. Remember, D&B was 206 million businesses. The next closest company has 27 million. Okay, and these business records are spread over 80 countries now that they're in. They're as far as the four main geographic areas, including North America, Latin America, UK, and Ireland, and the Asia Pacific. Okay, which brings us to another point. where their home office is. We already kind of touched on that. Well, they're actually out of Dublin, Ireland. Okay, they have operational headquarters in Nottingham, the UK, Costa Mesa, California, and Sao Paulo, Brazil. But their actual headquarters is in Dublin, Ireland. And they're actually listed on the London Stock Exchange, which we actually just talked about. And in March 2011, Experian claimed revenue for the prior year of about $4.2 million. Currently, Experian employs over 15,000 people working in 41 countries. Okay, so Experian focuses on providing quality data and analytics to businesses to help them better assess risk. They possess a massive consumer and commercial database that they manage. And obviously, they're much bigger players in the consumer world than they are in the business world. I don't know about that because Experian isn't a big player in consumer world. They're kind of third. Whereas in the business world, they're by far the second. So they then extract significant extra value with this data by applying their own proprietary analytics and software, which is another interesting point as we dive into Equifax, is Equifax's age and history. Okay, so a lot of people don't know that Equifax is the oldest and largest credit bureau in existence today. They were originally founded in 1898, 70 years before the creation of TransUnion. I think that's cool. I just think it's neat to know that Equifax was around 70 years before TransUnion was. Okay, back in the 1800s. And how it all started, two brothers, Catter and Guy Wolford, created a company. They actually got the idea from his grocery business where he collected consumers' names and evidence of creditworthiness. So this is actually pretty interesting to note because it actually started in the grocery business. Now, this isn't where credit scoring started, but this is where credit reporting basically started, was when Catter actually got together and started, basically collecting information from his customers from his grocery business. And then what happened was, because he was doing this, he started talking to other merchants, and other merchants said, hey, that's interesting to us. We would like that information too because it might help us decide if we're going to extend credit to these individuals. So he then sold that list to other merchants to offset his business costs. Okay, so very interesting to know that the credit reporting is actually started in the grocery business. And the success of that tactic led Catter and his attorney, Brother Guy, to Atlanta, where they set up what would become one of the most powerful industries in existence today. The retail credit company was born, and local groceries quickly started using the Wolford service, which expanded rapidly. And by the early 1900s, the service had expanded from grocers into the insurance industry. And then, boom! When that thing hit the insurance industry, then it really, really took off because that had mass appeal. So retail credit company continued to grow into one of the largest credit bureaus, and by the 60s they had nearly over 300 branches in operation. They collected all kinds of data, rumors, stuff about people's marital lives and childhoods. They were even scrutinized for selling the data to just about anyone that would pay the money for it. And through the 60s, they continued to provide the credit reporting services, but the majority of their business came from making reports to insurance companies when people applied for new insurance policies. Okay, and that's what I said. Once it hit that, once credit reporting hit the insurance, it was just off. It took off like wildfire then, because then it was used for life insurance, for auto insurance, for fire, for medical insurance. So it had mass. It started taking up a lot of the market because it was started widely being used by these insurance companies. And almost all major insurance companies were using RCC to get information on the health, habits, morals, finances, and vehicles use of potential insurers. Which brings us to another point, the data that the Bureau collected. Okay, people forget before regulation what credit reporting was. Well, Equifax has provided companies with service information including claims on making employment records or when people were seeking new jobs. Back in the 60s, most of Equifax's credit work was actually being done by their subsidiary, the Retail's Commercial Agency. Okay, now in the late 60s, Equifax started to compile their data onto computers. So they started to take all these rumors and all this data they had, and they started to kind of streamline it onto computers, giving them more companies access to this data if they chose to purchase it. They also continued to buy up many more of their smaller competitors. Remember, this is what I was just talking about. where the credit reporting agency started coming in the United States and started buying up all these small reporting agencies, and they became larger and also attracting the attention of the federal government. Okay, they began to earn a bad reputation for selling data to anyone who wanted it, whether or not the data was accurate. Remember, we come back here now to D&B and how D&B prides themselves on the accuracy of the data. Not to say Equifax doesn't, but back in its inception, and back here even in the early 60s, 62 years after it started, you start to see that this information was still being sold to anybody that would buy it, and nobody really cared about the accuracy of the data. They would just collect the data and sell it. There was really no process to verify that the data being sold was actually accurate. Okay, so Equifax was gathering details about people, including their marital troubles, jobs, school history, childhood, sex life, political activities, and more. There was no limit to the kind of amount of data they were accumulating, and some of that information was factual, while large swatches of the rest were completely false. Some information was literally no more than rumors. Equifax was even said to reward their employees for finding the most negative information about consumers. Okay, so think about it. Their employees were incentivized to get the most damaging information they could get on people. So what happens? Well, people maybe make up a little bit of the information, and now all of a sudden the information is going on these people's records, and it's not even accurate to begin with, not to mention that it includes all aspects of the life, from marital troubles to childhood to political activities to all aspects of their life. Okay, which is very, very interesting and brings me to one of the other important things that you want to know about the Business Credit Reporting Agency is all this that I just told you about. It's Equifax's activities in all of this that actually led to the Fair Credit Reporting Act. So in response to what Equifax was doing, basically when Equifax started streamlining data, okay, and started accumulating other bureaus and doing what they were doing, then it started to get a lot of complaints. And complaints led to in response, the U.S. Congress met in '71 and enacted the Fair Credit Reporting Act. Okay, this new law was the first law to govern the information credit bureaus and regulate what they were actually allowed to sell and collect. Equifax was no longer allowed to misrepresent itself when conducting consumer investigations, and employees were no longer given bonuses on the basis of the negative information they were collecting, the standard practice in the past. This is interesting because if you look at the Fair Credit Reporting Act, and I recommend after this webinar you do, now that you know this, pay attention, look at it. See and realize that most of what is mentioned in there that they can't do, it was a result of things they were doing. They were doing all of this stuff. And you look at the Fair Credit Reporting Act sometimes and think it's so basic. Duh, of course they wouldn't do that. Well, that's what they were doing. That's why this law was actually put into place, to curb a lot of those unethical activities and actually make them illegal. So Retail Credit Division was charged with violating this law, of course. The minute they roll it out, the Fair Credit Reporting Act, it basically defies Equifax's entire business model. So a few years later, they're charged with violating the law, causing even more government restrictions to be implemented, and scared with a bad reputation for violations, they basically went to start over, and the company changed its name to Equifax in 1975. Okay, so they basically create the Fair Credit Reporting Act because of their practices. Okay, then they violate it and get fined a ton of money, and they have their reputation so trashed and tarnished that they basically changed their name to Equifax back in 1975. And then throughout 1980, Equifax, Experian, and TransUnion split up the remaining smaller credit reporting agencies between them, adding 104 of those to Equifax's portfolio. So again, this is the part in the history where I told you about that they just came in and started swiping up credit reporting agencies from all over the country. And in this swipe up, Equifax grabbed 104 of those actual companies. And then Equifax aggressively grew throughout the U.S. and Canada and began growing their commercial business across the UK. And at this time, Equifax started competing more aggressively with D&B and Experian in the business world. They then continued to grow, taking and aligning with CSC, Credit Services, and another 65 additional bureaus. Okay, the insurance reporting aspect of Equifax's model was ultimately phased out. Kind of funny. It's what basically created them. And at one one stage, the company also had a division selling specialist credit information to the insurance industry, but they spun off that service, including the comprehensive loss underwriting exchange, or the CLUE database. You will hear about that. That's still used today. ChoicePoint formerly offered digital certification services, which is sold to GeoTrust in September 2001. Okay, so they kind of started, they still did that, they just kind of broke it off into different divisions. Equifax has continued to grow, now maintains over 400 million consumer credit records worldwide. Kind of interesting, right? So Dun Bradstreet has 206 million business records, while Equifax has 401 million, almost double as much consumer records actually on file worldwide. But they're not as big of players in the business world. They also expand their services to directly offer consumer credit monitoring in '99, and today they're actually based in Atlanta, Georgia, and have employees in 14 countries. They're also a publicly company on the New York Stock Exchange, also the same as Dun Bradstreet is. Okay, since its inception, Equifax has operated in the business-to-business sector, selling consumer credit and insurance reports and related analytics to a wide array of businesses. Equifax reports are still commonly used by retailers and insurance firms, healthcare providers, utilities, government agencies, banks, credit unions, personal finance companies, and of course other financial institutions. And Equifax provides business evaluations for small business and corporations also. And they also offer a business credit scoring model known as the Equifax Small Business Enterprise. That's what they actually call their business credit score. And Equifax's model is designed for companies that provide goods and services to small businesses. So Equifax's source of data today is still some of the most vital information used by credit grantors to decide what sort of products are offered. And their system for collecting data is an exchange of a non-credit data, including consumer payment history on telco and other utility accounts. So that really has to do with how they're actually collecting that data. But you'll actually start to see with Equifax and Experian that they offer these merged reports with some companies where the person can actually get both consumer and business reports on the actual same report. So today Equifax is one of the major credit reporting agencies used in many, many countries. Okay, some of the countries that they're used is Canada, Chile, India, Mexico, Peru, the United Kingdom, and the United States. So that being said, you know, India, you're starting to see a big section. The UK, Canada, a lot of these reporting agencies already have big presences in those countries. But now you're starting to see India, Brazil, Chile. These companies or these countries are becoming big players in the business credit space. So you're starting to see them make massive moves in the actual space.